Go to Ross Greenwood now. Ross, what are we expecting?
Broadly, the market's split on this right now. You'd have to say, we'll find out very shortly, 3 of the 4 major bank economists are saying interest rates will rise today. Money markets say they won't. So it pretty much is split. We're going to find out in the next couple of seconds. Of course, this also importantly could be the last decision of the Reserve Bank Governor Philip Lowe. It's just dropped now. They've kept rates on hold. So interest rates, the cash rate kept on hold at 4.1%. We'll bring you up some of the reasons for this.
Good
but
news.
As I say, it was, if you got a mortgage, absolutely. If you got money in the bank, maybe not such good news for you. But the fact is that quite clearly now the Reserve Bank is saying it's going to watch to see exactly where inflation actually plays out. The monthly inflation data we know had fallen quite sharply in this last period of time. And maybe this is enough reason for the Reserve Bank to say that they did have the time to be able to look down and basically keep these rates on hold for the time being. We'll find out a little bit more about the reasoning for that as we go through, but the Reserve Bank effectively is sitting here and saying right now that it believes that it did have the ability to be able to keep the rates on hold. The final statement says some further tightening of monetary policy may be required to ensure that inflation returns to target. So they're not taking their foot off the pedal here. The important thing to recognise that even though rates are on hold now, the bias is still for rates to rise, and that's the message because they don't believe that inflation is yet defeated. They're quite clear in what they say. They expect the economy to grow as inflation returns to the 2 to 3% target, but the path to achieving this remains narrow. So in other words, they're not forecasting recession, but they are saying that if interest rates have to rise because of stubborn inflation, then it will really make it more difficult. You can see here the rise, 12 interest rate rises since May last year. This would have been the 13th that had happened today. It hasn't. That's a reprieve for some people. And you can see here the statement from the Reserve Bank basically saying they would hold interest rates steady this month, providing the board with more time to assess the state of the economy and the economic outlook and associated risks as well. But we've got Ed Boyd standing by with Matthew Hassan, senior economist. We haven't got him at the moment. We'll get him very, very shortly. What I want to take you to now, Andrew, is the markets and just show you what impact this has had on the money markets as we've seen through. A few of these bits and pieces we can show you. The share market, you can see this bounce in the share market today, up now more than 0.25% after it had been down lower. And have a look at that spike on the right-hand side. So that's the impact of the decision on the stock market that's just happened the last little while. If we go forward, we can see the Australian dollar. And here too, you'll see a fundamental change in the Australian dollar, a big fall. Now down, it was above 66.7 US cents, 66.8 US cents, now down to 66.5 US cents. And the final one I want to show you is money market interest rates. We look here through the 1-year government bond yield. And so when we have a look at this, what you'll see is, again, a big, big change. And again, look at the big fall there in that 1-year bond yield right at the very end, just as the Reserve Bank has made its rates decision. So the Reserve Bank has surprised markets, there is no doubt, by keeping these interest rates on hold today. And certainly those big bank economists, just one of them out of the 3 got it right today.
Okay, Ross. Well, I guess it is a. I thought it was expected, to be frank, but you might expect if they hike rates again, Ross, it'd be next month, wouldn't it?
Well, yes, and do bear in mind between now and next month, the Treasurer, Jim Chalmers, is going to make a decision as to who will be the next Reserve Bank Governor after September this year when Philip Lowe's term expires. Broadly, it's not expected to be Philip Lowe, although his hat is very firmly in the ring. And so this is perhaps the last act of Philip Lowe going out. Many people thought he may have raised interest rates simply to make the job of the next governor somewhat easier, and that certainly is going to be a part of the rhetoric going forward as we go to the expiry of his term in September.